The 80th percentile. Something just happened on the US dollar that we don't see very often, but what does it mean for us as traders and investors? In today's video, we break down what you need to know in regards to the stock market, gold, and some other asset classes, as we take a look at what's going on with dark pools ahead of CPI data. Also, what is the 100% stat that we've seen when we get PPI information coming in the way it just did? In today's video, we break it all down as we look at what Wall Street is really doing underneath the hood. Have they already started to buy the dip? Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we have a lot to discuss. What's going on with banks? Less than 24 hours now from the CPI data and earnings season kickoff. What does the options market tell us? And of course, some macro data that you want to be looking at, especially if you're a small cap buyer. Let's start off though with whether this market is totally oversold. So a lot of people are bringing up, I'm sure, an indicator that you've seen before, the percentage of stocks above the 20-day moving average. So I thought we might break it down together and have a look at whether this is a good read for us to buy the dip. Well, of course, we just recently saw the percentage of stocks above the 20 go really far down, and this generally signals an oversold style market. You obviously can see some of the best dips over the last couple of years have been purchased at around these points. But do remember, it is possible still to make a lower low. Although this is a great level generally to buy stocks if you are somebody that wants to average in, it doesn't necessarily mean it's absolute low. And you need to keep that in the back of your mind as Wall Street trap money across the board. And speaking of Wall Street, as we brought up in our previous video, smart money flows have now made a new low overall. Now, this has traditionally been kind of the level where generally the market starts to pick back up. As you can see here, smart money flow index just went to a new low, and this now marks the worst level it's been since the beginning of the rally back in 23. That is the last major sell-off where we saw smart money this low. Generally, this signals a potential contrarian indicator, and often we're looking for things such as dark pool transactions, which we'll cover later, and obviously V-shaped recoveries, which could be what we see if earnings season kicks off well, and of course the CPI data comes in favorably. A lot of people concerned about inflation right now, and rightfully so. So let's break down what Wall Street is doing that possibly could have us thinking a little bit contrarian about this sell-off so far. In our previous video, we discussed hedge funds being the most bullish on dollar since 2019. Now, we know when everyone stacks into a position, often it becomes overbought and therefore it becomes a contrarian indicator. Well, that's exactly what's just happened on the US dollar. And as you'll see in this data, daily sentiment has just risen above the 80 factor here for the US dollar index. Now, since that report, we've actually seen 2 weakness days in the dollar, and it's very close to a key technical that we'll look at later in today's video. But guys, look at gold's performance post these particular events. Now, not every time was it bullish over the next 1 or 2 months, but the stats start to look incredibly good when you look at 6 months, 9 months, and 1 month and 1 year later. And this is an incredible return, one of our favorite asset classes of 23 late into 24 and still there. Remember, we have a call that we made back in the 1800s for gold that we believe gold can get to 3,000 plus an ounce. And actually, I'm starting to think about upgrading that as kind of the world deteriorates around us, but still the markets actually continue to go higher. I think there will be demand for gold and, of course, potentially Bitcoin as well in the future. Now, let's look at whether the dollar could have just gone and seen a high. Often you'll want to look at yields. Obviously, the US dollar is up on tariff concerns and other things, but we're also seeing inflation concerns. And we just had a TD13 on US 30Y yields, which is traditionally in the last 2 times marked close to the highs. Now, it's always important to look at this as a stat that you don't just go, wow, it's going to change tomorrow and everything's going to change. It's more of a generalized high. And this is something we used in December of last year to say, you know what, we've got a bit of a caution read here on the markets in terms of how high they've gone. It looked like we were going to what we call a pullback in time, which is a sideways style market, or even a small correction, which is what we're in right now. At the time of this recording, we've just gone over 5%, which is a very important stat for the market to have already hit. So when we get the dollar index doing what it's just done, that is effectively gone overbought. Hedge fund managers are going a little bit wild on the dollar, and the news is certainly dollar, 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 bull, 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 bull. Should we be thinking differently? Well, take a look here at gold's average performance over the next year after the dollar daily sentiment index is above the 50-day moving average and it exceeds 80. Yeah, that's a pretty good bull stat here when you're looking at it as a chart. And of course, you've got to like this one. This one's from Subu Trade if you want to check it out on X. So what about the current correction? We know that the dollar may have just hit or gotten very close to a very critical high. We also know that when the market went as ballistic as it did leading into the end of 2024, it brings up the possibility of a 5 or even potentially 10% correction. And we really cannot discount the factor of a potential 10% correction. Now, when you get as high as we did last year, it opens up the probability of a 10% correction at being around 80% over that next 6 to 12 month period. Now, of course, we've been talking a lot about this, and at the moment, we've just hit basically the 98% probability, which is a 5% correction plus, which is, of course, exactly what we've just seen. Negative 5% plus achieved. Now, during normal times, you won't usually get anywhere near these stats, but of course, how high we went, how high the multiples are, it does open this. So you've got to remember there's still an 80% probability chance that this year we will have a 10% correction, and it of course is overdue. Now you may argue, well, we already saw one in 2024. It really depends on whether you take closes or you take wicks. That is more of a futures kind of market aspect to it. Yes, it went over 10% in the futures, but it certainly didn't on the real market when you're considering closes. And that is the factor that we're using here when we're reading it out. Let's now take a look at whether this market's oversold in one of probably the most hated areas of the market, which is the small caps. Now, of course, Tom Lee, many others have been going on about small caps for a very long time. We have really started to pivot more towards small caps, I would probably argue from around September to November of last year. And frankly, they've been not that great. You know, they've had some great returns, obviously post the US election, which you can see here, this massive pump, but they've since given up all of those gains. So the question is 24 really the year for these? Deregulation is the big storyline, and of course, the possibility of refinancing. A lot of people are not talking about the fact that 2025 near the end involves a lot of financing. And in fact, 2025 and 26 have some of the biggest refinance stats in them when it comes to the companies that don't make any money and therefore financed back in cheap money times. 2021, ring a bell. Yeah, this is going to be an issue. So of course, we need to be looking at, will we get deregulation? That's going to be super bullish to the Russell. But take a look at some of these stats. The Russell just gave up the 200 daily moving average. Now, traditionally, I do not like it when markets go underneath this factor. In fact, we posted over on LinkedIn. I post on my private LinkedIn if you guys want to follow, and we'll look at it a little bit later, some rules for investment theory into 2025. And one of the things was don't buy too many stocks, or don't even buy stocks underneath the 200-day moving average. That is not showing you an overall cheat sheet towards momentum in the positive case. But when the 200-day is given up, which it was for like a split second, then we need to look at these stats. These are the only other reads we have, but you'll notice here that a 1 year gain is pretty likely, and more importantly, that we have actually a very good gain overall, something that probably would beat the S&P if the markets do end up doing better. Would that take us to a new all-time high? Yes, it would. And of course, this is something that I'm sure many people are looking at. The key will be to break this level from a swing trader's perspective, though, which we'll look at later. We must get through the supply, which is the key. Now, most of you are probably concerned about the data coming out over the next 24 hours, and rightfully so. Inflation is now the storyline. And of course, we have jobs numbers every month, the non-farm payrolls. Make sure to subscribe to the channel if you're interested in finding out more about that. But also this damn CPI data. Are we seeing reinflation? Well, we gave this report here earlier this week, and obviously it shows you that maybe people are expecting to possibly buy in terms of systematic funds, and there could be some purchasing actually going in before the CPI. But the PPI, strangely enough, came out earlier. And this is an interesting one because we now have the PPI data, which came in, as you can see here, lower than the expected value. And that brings an interesting stat. Now, of course, stats just stats, but we can still add it to the bull favor, which is that when we usually see core PPI going below the expectations, that actually has a 100% strike rate with bringing CPI into the actual number or even below. Take a look at these reads. You can have a look at it. Post it over on our X account. Links in the description down below. Some interesting stuff here. So if we're taking that into a, let's say, crystal ball style situation, I guess we'd have to expect CPI to either hit the number or even come in better. And that might be contrarian to what a lot of people are probably thinking out there. Hey, it's a stat. Thought it was worthwhile bringing up. Now, what about US small businesses, arguably the backbone of the economy? Are they feeling good? Well, the latest sentiment survey, especially post the election, is incredibly positive towards these small businesses. Small business people are going wild. And I've got to say, people that I'm seeing out there in the industry, a lot of people are starting new businesses. So that is a good sign, but also a little bit of a scary sign. We'll talk about that more during 2025. But certainly small business sentiment is up, which could mean that maybe overall we think that markets could do well into this earnings season. Speaking of earnings, these are the options in terms of the options movement expectations. JP Morgan, Goldman Sachs, Wells Fargo, Citi, all sitting around 3 to 4% in terms of expected moves. Same day, we have CPI, which comes out 1 hour before the market opens. And obviously, then we see some big banks as well, along with TSMC, which is expected to be, get this, for semiconductors, plus or minus 8.4%. Whoa, that's going to be a big day. So we're still in wild earnings, but at the moment, earnings is key. In fact, if the percentage of S&P 500 companies end up having a positive 12-month percent change in forward earnings, we're going to hit a critical factor, which could be another one of those big factors that we use for 2025 to say, you know what, calm, we have no emotion, and we basically look at the idea that other than one read, which was just before, of course, the dot-com crash, we generally have an 80th percentile here, really breaking down the idea of a still strong market. Now, I think it's worth noting, though, that when you get into this area, does anyone see the problem? Yeah, it can go for a little while, but you're on a timer. And of course, we've talked about the idea that when bonds do things like uninvert the yield curve, you're on a timer. So that one is to be watched. First 5 days of the trade year, obviously here are the stats we shared in our previous video if you want to pause. But let's take a look at flows. Interestingly, slight edge to Ethereum over the last 24 hours. So we expect basically now that we saw those lows for Bitcoin and the crypto markets to potentially now see that as the low point. That should be the low for crypto if we are going to continue in strength. Yeah, maybe it will spike one more time down there, but this is likely the low. Have a look here, though. Over the last 24 hours, slight positivity towards ETH inflows, and Bitcoin actually remains slightly negative, even though we saw market action coming right back up with that big bullish hammer. So something to watch, of course, post CPI. I still think the overall price action looks relatively positive, especially with Bitcoin, which we'll look at soon. Now let's go through some dark pools ahead of CPI. We expect the next 24 hours to be absolutely wild with these. I'd say there's going to be a lot of transactions. But we can see here that the S&P 500 did get a couple of nice sweeps in dark pools. Not the biggest ever, but it was still about $2.5+ billion in transactions here going through. And we can see that they're right near those lows. So certainly this has been where traditionally we've seen those other really large transactions. Is it possible these are sells? It really is, because of course we haven't taken price above this key point we'll look at in a moment, but still the big transactions were there. We also saw Morgan Stanley getting a couple of large ones on it, and we've already seen some large sweeps on banks ahead of earnings. And obviously they did pick up over the last 24 hours. Just some other things, just to repeat from the previous video, someone did close a short right at the lows. Some people started to, what we can only assume is probably buy the dip on Nvidia with a 2x leverage. And of course, Bitcoin also got some love there as the markets took the lows and started to rally. So the third largest trade ever on ProShares Ultra Bitcoin ETF came through right after the market basically stole everyone's stop losses. Now let's take a look at the real market in terms of how we're looking so far into realistically CPI, and it's a tough one. What is this? It's a long leg doji, and as you know, if we see long leg doji, it means indecision in the markets or equilibrium. Basically, the market is chilling, ready to make the next decision. From a TA base, you're always going to look at this and say, well, that was support. Now it could become resistance, and that's basically what we call role reversal. So it's certainly not out of the problems yet, that's for sure. Gap fill, yes, that did happen. And of course, downside protection, probably somewhere around 57 to 56. So is this really where those big buys will most likely come in? Yeah, that would be an exceptionally good level to be looking at. But remember, we cannot discount that 10% statistic based on just the evidence of history. For now, though, we do think that, of course, the markets are generally trying to buy up, and swing traders will be looking at the same levels that we've been mentioning recently, which is 66,000 and 59.30. So if we get through 59.30, we're putting in the good work here of probably breaking the downward trend line. And if we get through 6K, then of course we're making a higher high, which is really where it becomes more safe to say, okay, all-time high incoming for the S&P. Bulls are back in control. Obviously, a lot of people are probably making a big deal about 2050 crosses, which is the two moving averages. You can see these can be quite short-lived though, so they often get close. They don't always cross, but this is another negative. There's no doubt that the sentiment here in markets is not necessarily super bullish, and there's going to be a lot of problems around 5,900. Now, let's explain why that's going to be there. Have a look here at the options levels. 5,900 into CPI earnings season kickoff. 5,950 becomes the call wall on the next session, and we now have a lot of options moves. 5,800, the put wall, which we're about 43 points away at the time of this recording, and then 5,750, 5,700 becomes now the super support. And I think this is important to note. Now, if you're looking at the 17th, things get different again. In fact, I think favors more the bulls. You might say, well, there's tons and tons of puts out there. There certainly is coming into the OPEX, but still the market may want to push above 5,900. So if it doesn't want to pay out puts, it's going to try to enter positive gamma, get back above 5,900. For now, though, bears are still in control of the options market. They're still in negative gamma, and we obviously need to see Wall Street really affect price back above that 59.30. That's going to be very important to hold. So 57 on the base end would be exceptionally good level to watch Wall Street probably buy back in, but 59.30 would be where the bulls probably sit, and they would say, you know what, we're winning, let's pile in now, guys. Systematic funds come back in, momentum, etc. It all starts to compile upon itself. Tesla still struggling with 400, no real surprise, 380, 400 key levels there, and Nvidia holding for now, 130 put, 125. It must hold this area. It's so important that Nvidia holds between that block, and that's coming into, again, the OPEX. Now, as I mentioned before, I did post over on LinkedIn some thoughts about 2025, and I gave away kind of 30 concepts here and rules that every investor must know for 2025. If you're interested, check out the comment down below. You can follow along there. I will be posting a lot about psychology, a lot about, great investors and what they do, and some different information that we don't always cover here on the channel. So if you're interested in that, check out the links in the description down below, and of course, follow along. It's completely free to do so. Love to have you over on that platform. All right, let's jump into the charts now and have a look at the American consumer. Any changes? The short answer, no. Still looking pretty good there. Obviously, that's a bull sign for us. US 30 and US 10-year, certainly a problem. This is definitely the most negative chart at this stage. And what it's telling us is it's saying, previous times when we've seen this, it's caution. So we really need to see that V-rip. We need to see the market regain those key levels, and obviously options to start moving back into positive gamma. This is certainly a concern. And of course, it has us wondering, where are the large trades in treasuries? Are we going to see some support on treasuries? We're watching this. We don't believe price action improves until above 88. And I'm looking for those big dark pool transactions, guys. So if they do come through post CPI, we'll be the first to alert you, and you'll know within, 24 hours. Let's have a look at the options. Definitely a little bit of options bond freak out into CPI, certainly spiking up a little bit. Again, usually we've already seen the kind of peak fear. Traditionally, they've always been turn points, but again, we make a new high, that means that 56, 57 likely to occur. We'll update after CPI on that. And US dollar has fallen again. So it hasn't reached the 110.70. I'm still very cautious here on calling top for the dollar. Obviously, I think this is really possible. I think someone that's positioning and starting to say, you know what, I want to be contrarian, I want to go against the dollar. This is not the worst case to do it, but just remember, this is very possible. And this is probably where I would expect consolidation. So post CPI, we might know more. Underneath 107.70, well, that's going to be a different story, and we'll talk about it. Gold still back in a pullback in time. It's still bullish on the small time frames. Nothing much changed here. Nothing much changed in silver either. We'll just take a look at that. So silver found a little bit of support around that 29.50. Obviously looking still for that to go above 31.15 to let the swing traders in. Now let's look at oil. So it hit into our pretty much targeting zone, which we mentioned. It's since dropped. It's putting pressure on this downward side. If we break below 77, kind of 40, then we're probably leading into this previous, what was 76 target. And that could be a good sign for bulls as well. So something to watch. Oil, I would say the temporary big move on it's probably over. We've been following this one now for a couple of weeks. Congrats, guys. Well done. I'd say it's in a pullback in time or even a bit of a sell-off at this stage. Not sure I'd take the sell, but that's our thoughts. Tesla, 420, too much for it, funnily enough. And then we've got 380, of course, on the low. So really stuck in a channel here. If you want to take a look a bit more at the channel, you can see it on the 2 hour starting to form. So maybe it's a sell the high, buy the dip, sell the high, buy the dip for now. We'll see if that holds through. Semiconductors, still very critical, right at the right levels. Nvidia, still very critical, needs to hold above here. Otherwise, we're getting some form of weird distribution pattern. That won't be too good. And AMD, potentially an island reversal? Question? Well, we'll see. We know big trade came through here. We know it's now held 1, 2, 3 days down the low. If it gaps up and looks good, you can place stops below the low and potentially look at that as a potential Wyckoff bottom as well, especially if it breaks 131 after that. This could be a really cool trade if the market chooses to go in. The good news is if the CPI comes in and everything loves it and that AMD goes, haywire in the morning, that's probably going to be a good sign, at least statistically, that things are looking better. Remember, practice your own risk management. It's just a technical. You have to make your own choices. Let's move over to the Chinese stock market. Bit of improvement after China signaled they're doing whatever it takes. Let's be real, it's a joke. The whole thing here is the market wants something, China's not quite giving it to them, and it's a game of cat and mouse. So have we seen price action improve? Yes. Is it oversold? Yes. Are we sure that this is the low dip? No, but certainly it's improved. And now we look towards 19.5. So that's obviously the next level here. US 2K, obviously holding above that daily 200, which is really important. I don't have the daily 200 here, but if you pop it on, you'll see that it's sitting right around that level. And again, swing traders are going to want 2,300. 2,300 plus, really great sign. The bulls are back in control. I would not be bearish after that point. NASDAQ, yeah, same thing. Little bit of a decent buy here, 26, same as the S&P 500. Little bit of a pullback. Decent day trade lows. Pretty decent level. Obviously, though, not a new high yet. So we're still looking at 21.2 to try to start to confirm things are improving. And that's going to put pressure on, of course, that downward trend line, which, as we know, is what everyone will be watching from the bull end. So no surprises, that's their key. Solana, nothing much. No new alert. Obviously, we're not above these 194s yet. So Solana, not really seeing anything there. And as you can see here, Ethereum, although inflows were in, still no high. 3,400 needs to be broken. Great wick, held it. That's good. This is where the shorters will come back in. This is the supply, so you can see why they would short here. So too early to call. And strangely enough, Bitcoin's done a lot better. So you look at Bitcoin, and yeah, I understand this is the supply. Yes, you could definitely make a case of this still being the short zone. But I tell you what, looks a lot better on the charts than any of the other cryptos right now. So although I'm a bit of a fan of the alts leading through the next 3 to 5 months, I still think here this is the leader ultimately. It's like the S&P 500 for crypto. So very key level, something we'll be wanting to watch here and pay a lot of attention to. And if it does pull back, I'm thinking around this 93.5, you're wanting to see rebuys. This is effectively the most traded zone. So it's very important that bulls regain around here, wicks around here, nice action around here towards the upside. That's a great sign that at least one of these major markets is finding the buyers it's meant to. So as always, guys, leading into CPI, it's always a tough one. Of course, we've got the stat there, so we'll see whether that holds true. And if the market likes what it sees, then we could see a very quick movement towards the bull end as we head into inauguration. Obviously, 2025 is tough. We bought the stats. If you enjoyed today's video, make sure to subscribe down below. Check us out over on our other socials, obviously X. Follow me on LinkedIn as well if you're interested. I said, I'm posting a lot of stuff there that's quite unique. And love to see you around the next video. Bye for now. Let's go and find out what Wall Street is up to next.